Welcome, dear traders. You are watching a recap of the Asian session. Yesterday, the World Bank cut its forecast for global economic expansion. It expects the global economy to grow by 3.2% in 2022, down from its previous estimate of 4.1% due to the war in Ukraine, inflation, and the lingering effects of the pandemic. However, the bank does not exclude another slash of the estimate due to high market uncertainty. Likely, everything is more or less certain in markets today, and let's discuss the main highlights of the Asian trade. On a Monday, trading on Wall Street was rather tense. The US main stock indexes closed at the lowest level in Asian trading. However, today, US stock futures increased slightly. Such weak fluctuations are associated with the upcoming publication of earnings reports. Netflix, Johnson&Johnson, Travelers, Lockheed Martin, and Truist Financial are scheduled to reveal their quarterly results today. Investors also remain cautious because US Treasuries have risen again to the highs of 2018. Inflation continues to grow further, so traders are expecting the Fed to hike rates at a faster pace than planned. The combination of these factors may easily push the world's largest economy into recession. For this reason, traders abandon tech and healthcare stocks, adding to the portfolio the shares less sensitive to market turbulence. In this case, the stocks of commodity companies are the best choice. Given the current situation, it's hardly surprising that the US dollar keeps rising. It's steadily holding near the highest level since April 2020. Now, particularly, all fundamental factors are favorable for the greenback. The national economy is strong. What's more, the US dollar is a safe haven currency. Of course, such currencies are in high demand amid geopolitical tensions. And the Fed is expected to hike rates more aggressively. The yield on the benchmark 10-year Treasury note reached the highest level, such as 2.88 and 2.46% a bit earlier. Last but not least, its main competitors, the euro and the yen, have been dropping for some time, and the central banks of Japan and Australia are reluctant to tighten monetary policy, and the greenback takes advantage of the rate caps. Yesterday, the US dollar index approached 100.86 points, the highest level since April 2020. In the Asian session on Tuesday, it slowed down a bit. At the time of making material for this video, it was trading at 100.74, and perhaps it will regain ground in the US session. Currently, it's consolidating within the daily range of 100.71 and 101.10. The yen is the weakest currency in the basket. The fact is that the Bank of Japan remains dovish. It's struggling against the tide of rising global interest rates. It more than once made a huge cash injections in the economy to keep the yield of government bonds near zero. At the same time, the country's officials have repeatedly stated that they are more concerned about the sharp movements of the yen than its weakness. Today, Japanese Finance Minister Shinichi Suzuki said that there would be no currency interventions. He also added that the central bank does not focus on exchange rates. Apparently, being the third largest economy has its perks. The country is able to go against the trend, stubbornly maintaining the ultra-loose monetary policy. The yen has already sunk to a 20-year low. In the Asian session, the dollar-yen pair took a nosedive to 128.40. Analysts suggest that the bearish pressure will persist in the future. Today, as seen on the chart, the pair is trading with a bearish bias. The yen is moving in a narrow range of 126.96 and 128.43, extending losses. It still lacks drivers for performing a reversal. Clearly, the statements of the Bank of Japan governor and the Minister of Finance were not enough to support the national currency. Earlier, the central bank said it closely monitored the movements of the yen and how they affected the economy. The also managed to slightly rebound upwards versus the US dollar. Trading floors in Australia were closed on Monday, so traders have returned to markets only today. Perhaps it may somehow help the Australian dollar climb higher. The AUD-USD pair advanced to 0.7393. It's fluctuating between the support level of 0.7347 and the resistance level around 0.7404. The Australian stock market gained momentum after a long weekend amid rising prices for commodities and a high demand for mining stocks and gold. Apart from that, the sentiment improved thanks to positive news from China, Australia's largest trading partner. The Chinese authorities reported that the central bank intends to increase support for the economy to better the negative consequences of the pandemic. The Reserve Bank of Australia meeting is scheduled for June. The regulator is expected to raise the key rate. Many analysts believe that on June 7, the Reserve Bank of Australia will hike the rate to 0.25%, and by the end of the year it will undertake 7 more increases to near 2%. However, these are just forecasts. We provide